Hello everybody. Sorry for the inconvenience. If you want, just type in the chat 1 if you can hear me. One, fantastic. Sorry for the inconvenience. I had to move a couple things for a friend that I actually was aware of before the live, but I didn't think it would be cut off that short. Let me just wait for a few more people. I don't know how many more people are going to pour in. You know what I did want to test is if you guys can hear music that I'm playing. That was another thing I forgot to test while I was doing the previous live. So let me put on some music and let me know if you can hear that. Honestly, I would prefer that you guys can't hear the music and I'm only able to, but we'll see. So I'm currently playing music. Let me know. I don't think you guys are able to hear it. It's actually a good thing. I would rather the chat not be able to hear it and only myself. So when I'm in a live session, I can at least still listen to some music. Don't hear it? Okay, perfect. It's actually what I want. So, well, let's just get into it, and whoever ends up showing up, ends up showing up. Where were we? So we dug underneath the sell side liquidity pool there. We still have some unfinished business here with the relative equal lows. So as I was discussing, sometimes when you make a new low underneath a sell side liquidity pool, it may allow price to return into a short-term premium. And this is where a lot of 1-minute entries are not as high probability. It's something that you have to be aware of it and basically be able to determine that that's not high probability. So let's play this out. I'm really going to focus on this macro here, and I just want to observe it and see what happens. But remember, we have sell side liquidity pool here, and then we have one more underneath that low. Let's go ahead and play it out. So I'm going to stop it right there. You see how we're inside of this fair value gap there? This, to me, would be a lower probability entry, personally. Why? Because we've taken out sell side liquidity. We've now reached into a new low and into a deeper discount. And as I just discussed, this can allow price to move back into a short-term premium on a higher time frame, apparent time frame, right? So when you're looking at the 1 minute, you can see that there's a fair value gap. You may want to enter into that. That may be something that you're looking at, right? But this would be a high probability entry if this was before we took out the sell side liquidity pool there, which it already has done the work. So I may have to wait for a short-term premium on a 5-minute, a 15-minute to be met before I can look for another short opportunity. So let's just see how this plays out. It may completely fall off of that. Okay, so what did I just discuss? That this was a low probability 1-minute time frame for value gap. And what were the reasons behind it? We taken out sell side liquidity, we made a new low, or inside of a new discount. So this is not high probability. This is something that you need to observe and understand. You can't just go into a 1-minute time frame and just look at any fair value gap, any PD array, and just jump into price. You need to know where you're at. You need to know what price is done. All of those are very, very crucial. And if you're observing, like if we were in real time, SMT, there may have been an SMT divergence. Maybe with dollar, there might have been, something else as well. So those are factors that you can play into it. Let's just keep playing this out. So the fact that we've gone above it, closed above it, I would potentially look at a possible inversion level. So this acting as support for us to maybe move back into a higher premium. So this is where I'll go out to like I'm not sure what the 30-minute looks like that. It's interesting. I'll go out to a 15-minute time frame and I can see that there is a fair value gap here. So in my eyes, if I wanted to continue to look for shorts, I probably would have to look at this area of interest before looking to short again. Do I really want to long this? Not necessarily. It's not something, if I'm overall bearish, my narrative is bearish, then I don't want to try to pick a bottom here and try to just go for, I could go for a short-term scalp, but I'd rather just go with the overall flow of what price is doing. Seems a little bit higher probability to me. And this is where I'll go out to a little bit higher time frame. I'm just kind of scanning. So the 1 hour here, 4 hour. If I think there is more juice to be squeezed out of the day or out of the session, then that's something I'm going to keep pushing for the shorts. As far as what I'm looking at, it looks like that could be true. So let's see here. So I'm going to be looking at this area, this red box, and I'm going to see if that matches up with the macro. Once we get in that gap, do you look for a fractal lower time frame entry? Sometimes, but I don't necessarily need it because sometimes you may not get it, right? So this is where determining and having experiences, and this also has to do with risk. I'll enter off of a 15-minute, a 5-minute fair value gap. It doesn't have to be a 1 minute. I don't have to wait for price to dig into that, then on a lower time frame on a 1 minute, wait for an entry pattern. I don't have to wait for that because sometimes it's waiting for too much perfection. It's waiting for too much. And sometimes you may just get a spike up into this, right? You may get a spike or an IOFED and then it just drops. And then there's no 1 minute entry. But you saw it on the 5 minute, you saw it on the 15 minute. So to me, it's just determining your risk. How large is the risk? Where's the reward at? That's balancing out with a higher time frame kind of pattern. But if I do see that it's a possibility that I could get it on the 1 minute, again, it's a lot of determining and judging in real time. Let's see here. So currently, we're inside of that. Let's look at a 5 minute here. We find it there. The issue that I'm having is once we've got underneath this low, I just don't know if this is an outright reversal. It's hard with backtesting, as I've mentioned. But let's just see. I'll do the if this reacts off of it, and if prints a 1 minute, then I'll do that. So you can see here, we've reacted off of it. So you could have entered off of this. And I'm going off of the idea of the 1 minute entry where you've reacted off of a higher time frame PD array, and then you're refining it into a 1 minute. Yeah, exactly, Duke. Yeah, it could be an inversion model as well. I mean, I'll leave it on there. You need to be very careful with inversions and making sure you know where you're at and what you're doing with them. I see way too much on social media trying to teach them. It's a very touchy PD array you need to be very, very experienced with. So you can see here, we're inside of the macro. We have a small fair value gap there. And then we're inside of this busy here. And this could also, this old SIBI could be used as an inversion if we get underneath it, so I'll just leave that there. Let's see, we reacted off of this fair value gap, order block there, extend this a little bit over. I'm just seeing, can I attack that red line underneath this sell side liquidity? There we go. Sell side liquidity. So that is a kind of an example of what you were just talking about, Duke. Looking at that 15-minute time frame, looking at that 1 minute, you're refining it. Sometimes you may get it, sometimes you may not. It just kind of depends on your style and your risk and the things that you particularly like. So if you like that 15-minute time frame fair value gap, you like the 5 minute, you're comfortable with the risk, then you can enter on that. If you like the 1 minute, refining it, reducing your risk, it's perfectly fine too. Don't let anybody tell you, your model's wrong or the way you view the market is incorrect, or at least the way you like to enter into the market is incorrect. So now that we've completed the silver bullet session, this is on a Monday, let's skip to the next day here. Okay, so this is the silver bullet. What I like to do is remove everything, and then jump back out to a higher time frame, look where we're at, and then I'll work my way back down again. And this is what you should be doing in terms of back testing, is really going from a higher time frame and working all the way down into a 1 minute, and then going through the session, seeing where you would have positioned yourself in, and then continuously keep doing that. You can journal on this as well. I'll show it. But looking at the weekly time frame, if you're on the first live, I talked about this fair value gap there. Like I said, I've never looked at this price feed. I have no idea really where we're at. I know that we're in 2014, but that's it. But I talked about how we'd likely revisit this fair value gap there. Looking at the daily time frame, I see a sell side liquidity pool here. So relative equal lows. I also talked about on the previous session this wick here. So if you weren't on the first live, go back to the first live, and I talked about this wick, the equilibrium of it, and look at how the bodies close directly on it. So in the daily time frame, we closed underneath the new low. We have an up close candle above price. So we have one here. So if I was looking at this coming into the session, we may want to drive up higher before expanding lower again. We're inside of a 4-hour SIBI here. Let's go into a 1 hour. We have a fair value gap there. So I'm going to take this away. Let's dig into a 30-minute, 15-minute. So I see a couple. There's a 15-minute time frame fair value gap here. Reclaimed, and then another one there. So if I know coming into a session that I should be looking for lower prices, then I'm looking at premium PD arrays, and I'm looking to see if we can expand towards that, and then can we get a rejection away from it and start displacing towards a sell side liquidity pool. Let's go into a 5-minute, and then I'm going to split them. So this was the open here. We dropped lower and then expanded higher, dropping down into a discount, and then into this BISI here. Let me go into 1 minute. So going off of the idea that I should be looking for lower prices, I'm going to wait for that type of signal to kind of print. So let's just kind of play this little by little. So right in here, all of this, right? There's a BISI here, and I see this, right? So there's a small fair value gap with an order block after taking out buy-side liquidity. This is a 2022 model, but to me it's a premature entry. I typically like to have, I don't like to pick tops or bottoms. So for me, what I'm comfortable with is I'm allowing price to react off of a bearish PD ray first, displace lower, give me a little bit better confirmation than trying to pick that top, because I can make just the fair argument that this could go into this fair value gap and displace higher again. So to me, it's looking 50-50. So the best thing to do is to kind of wait for price to give you that signal. So right there, you see that's a nice energetic displacement lower. Now you could say, I missed the entry up here. As I just discussed, I could have seen it easily going higher. So allowing yourself to do nothing and just waiting for time to do the work for you is really, really key, at least in my eyes. Let's play this out again. See, so right at this moment in time, I'm just stalking to see if a fair value gap will form, because now I'm really, really at least confident that we should move lower. And this is me looking at a 5 minute now. What I'd be aiming towards is, can we dig into the sell side liquidity pool there, and then into that BISI again. And there's a small fair value gap there that would turn into an inversion. It'd be in confluence with what we're doing. So for me, I'm just going to be looking at that little pocket. Can we get up into there? So I kind of missed it. I know it's replay mode. If I miss it, it is what it is. So right there, we scan out to a 50 minute and a 30 minute. This may be one of those seek and destroy type of days. We'll just see. But I'm going to put a position on just for the sake of it. So in here, if I was entering off of this fair value gap, my stop loss would go above this high. So if fair value gap is 3 candles, this one here, second one, and a third one. So your stop loss when you're entering off of fair value gaps goes above the second candle that creates the fair value gap. So this one here. Forgot, let me, it's place order, right? I believe I save it. I think that's really cool with FX Replay. If you put the risk to reward tool on, it will automatically place everything. And that'd be looking for that sell side liquidity. So let me go out to 5 minute again. And then you see how after the entry there's a small 5 minute fair value gap that formed. So I'm going to annotate that. And then we're stopped out. So what would be the reasoning behind getting stopped out? If I'm looking at this, I said this before I even took the entry. I'm looking at the higher time frames here, and it looks as if we dug into that fair value gap, and then we just kind of dug into this order block, the mean threshold. And I said I'm not judging myself heavily at all when it comes to backtesting. There's too little information for me to work with. Just trying to gain pattern recognition. So you can see we didn't close underneath this 5 minute just yet, which is fine. So if I wanted to kind of reverse the idea, and I'm not just reversing it just because I got it wrong, if I can clearly see, okay, I just got it wrong, it's actually really bullish, or it is bullish, then I can look again to reanalyze. So in here, we closed above the SIBI, so that now becomes an inversion level. So I'm going to see if it dips back down into there, if we can get an entry in here to expand towards the buy side liquidity. I'm just looking at this, and in my head, I'm kind of already aware of this. It seems like a very seek and destroy type of profile day. But I'm just going to go with the idea of what I just said. I'm going to enter off of the inversion here. And if, for me, my rules is if I get 2 entries wrong in a day or in a session, then I'm done. I clearly have, I'm not analyzing the market correctly, and probably my emotions are heightened. So it's best to stay away from the markets after I've lost twice in a row. That's basically my rules and the way I view it. Okay, it's saying order not complete. Let's try this again. All right, well, let's just see if... Let me know if the stream is still good. It's saying I'm having some difficulties, I believe. Where I believe there's ads being ran. YouTube is not receiving enough video to maintain smooth streaming, as such viewers with extreme buffering experience. Just type of 1 if the stream is still good. I'm going to wait a second here. It's saying the stream's health is poor. It's all good. It was buffering earlier, but now it's working. Okay. I don't know how far the delay is for you guys versus me, so I'm just kind of gauging that as well. As long as everything's good. I mean, it says it's poor, at least the stream health, so I'm not particularly sure. But as far as if you missed, we get stopped out on that inversion. So yes, 2 trades is all I do. Let's see, it's buffering here. So the reason for that, as I've talked about before, is simply my psychology. I know myself very well, and I'm sure if you've been around, you know yourself very well. That's just kind of my limit. I know how close I am to basically tilting. Even as somebody that's super experience or advance in these concepts, you're going to be very, very likely to tilting. Still buffering. Yeah, this is basically what I was trying to test, is if the live stream is going to be good. Yeah, see, I don't know why it's poor. Let me see if I can do something real quick. About a 3-second buffer every minute. Alright, thank you, Duke, for letting me know. I'm trying to fix it, but I'm not particularly sure why that is. I don't know why. Internet's good, everything's good. Let me see if I can change the bit rate. Let's change this bit rate. Alright, let's move on to the next day, and if, you know, the stream goes down, it is what it is. To kind of notate that session, I talked about how it was likely to be a seek and destroy session. And if you kind of want to know how to identify that, is through looking at what price is done. So we've taken out buy side liquidity there, and we took out sell side here. So when you're running out sell stops, running out buy stops, both sides are cleared. So this may maintain range bound inside of basically the equilibrium of this price run. So you can see we just keep coming back to equilibrium. This place a little bit lower, higher, back to equilibrium. It's saying the stream's buffering on my end. I'm gonna have to get this figured out before Monday. It's kind of something that I dealt with last time I streamed, and it's very much a distraction to me when I'm trading, because I don't want to be dealing with the stream and trying to make sure it's good.